All right, so the House Republicans are making a push for some substantial changes to the U.S. tax code. This is one of many that are being circulated right now. But in this one, they are looking to completely repeal the U.S. federal estate tax and the generation skipping tax. Now, we'll have a look at the article and then go look at the actual bill that's in the House right now, and then talk about some of the implications here for some taxpayers in the U.S. But what you'll find is that the vast majority of people in the U.S. will not be impacted by this change. So Republican lawmakers are mounting a massive effort to repeal the federal inheritance tax. This is also known as the estate tax or the death tax. Representative Randy Feenstra, he is a Republican out of Iowa. He has a backing of about 170 House Republicans that are supporting him on this bill. And the name of the bill is the Tax Repeal Act. Now, high-level background on the estate tax. The estate tax is a tax on assets, not income. So when we think about federal taxes, most people are familiar with an income tax. You have wages, you have investment income, capital gains, rents, royalties, whatever it might be. And then to the extent you have any net income, you're going to pay an income tax calculated on those earnings. The estate tax does not work like that. An estate tax is a tax on whatever the value of your net assets are on the date you pass away. Now, the estate tax threshold is relatively high. So if your estate when you pass away is under this threshold, you generally don't have any estate tax exposure. So if we look at the values for the current year and the prior years, these are the filing thresholds for the estate tax. So if we look at 2025, for example, the threshold here is 13.99 million. So if you pass away and the value of your assets, your net assets, are under this threshold, you don't have to worry about the estate tax. That's the general rule. If you're above this threshold, then you have a potential estate tax issue. Now, you can imagine, most taxpayers are never going to be near this, right? This is a substantial sum of money. But there are others that have a lot more than this, right? I mean, you look at any billionaire in the U.S. clears this by a mile. So they have a potential estate tax issue. So if we have a look at the actual bill itself, so this bill, the Tax Repeal Act, it was first introduced over a year ago, right? So this was introduced January 18th, 2024. It has quite a few co-sponsors, right? 172 co-sponsors, which is a good sign. But why hasn't it made any progress? Well, I mean, the last administration clearly wasn't going to go with this, right? Now that the Republicans have a majority, a slight majority in both the House and the Senate, and President Trump is in office, it clears the way for them to really, really make some progress on this and push it through. Now, why do they want to have this in there? The argument that they make, at least publicly, is that the estate tax has a couple of problems. So the first one is it creates a double tax issue, right? You pay taxes on your income, and then whatever's left over, you either spend or you reinvest. And then if you accumulate enough wealth, then you're going to pay tax on it again. You're paying tax on the asset. So there is a double tax issue. The other problem, and this is the one that individuals are more sympathetic to kind of in the Midwest, is you have farmers, a lot of small family-owned businesses where the value of the business is basically just worth enough to trigger this estate tax, but they don't have the cash or the other resources to pay it. And what they find themselves doing is they have to actually sell the business or borrow the money just to pay the estate tax. And that's a bind that they just don't want to put them in anymore. Now, you could argue that, well, why don't we just go back to the thresholds, and why don't we just increase this? If we have farmers that are close to this number or over it by 10 or 20 million, why don't we just make this $50 million And then that way, all of our small farms, all of our family-owned businesses fall below the threshold, don't have to worry about it. Well, they could do that, but their approach is, well, we're just going to get rid of it altogether. We just want to get rid of it altogether. No more estate tax, no more GST. So if we have a look at the bill here, so this is HR 7035. Pretty short bill, right? It's short and sweet because they just want to axe certain sections of the tax code. So the first provision there, they want to repeal the estate tax. So we're looking at subchapter C of chapter 11, chapter B of the Internal Revenue Code. So if we have a look at the IRC that's in Title 26, we're dealing with this section right here, all right, the estate and gift tax. So they want to get rid of chapter 11, and what they'll do is they'll sneak a provision in there into subchapter C and just say, well, after this date that the act is passed, this entire chapter just doesn't apply to you anymore, right? That's what they're going for. Now, the other thing that they're doing, like I mentioned earlier, is they want to get rid of the GST. So generation skipping transfer taxes is another issue that the wealthy have to deal with. And that happens when an individual that, let's say they have kids and then grandkids, when they make gifts to grandchildren, they are skipping a generation. So that triggers the GST. They want to get rid of that altogether as well. So also repealing, terminating the GST. But the one thing that is staying in here is the regular federal gift taxes. So the gift taxes remain. They're not repealing that. They've included an updated rate schedule and some new tables here. And you still get a lifetime gift exemption, right? So there's a 10 million exemption in there. So they're not totally scrapping everything around the estate, gift, and GST tax issues. They just want to get rid of the estate tax, GST, and then leave the gift tax issue still intact. So if you are gifting property above the annual exclusion, so if you're giving your friends or family cash or other property, transferring them a house, you still have to worry about the gift taxes, assuming this passes. So you still got to do Form 709. You've got to track your exclusion amounts and then pay any gift taxes that you might owe with the filing. So an interesting development in the world of taxation. We'll see if this does actually make any headway. My guessing is it probably does. I think they're close to getting this finalized. It's got a lot of support. 172 co-sponsors is a good sign. That means a lot of people are behind it. And again, they've got control of both the House and the Senate. And then with President Trump in office, who is also very wealthy, right? It's a bit self-serving here, right? Because he's going to want to try to avoid having to pay estate taxes as well. So the likelihood that this gets passed, I think, is quite high. All right, so that covers it for this update. Hope that was helpful. We'll keep an eye on this and see how far it gets. And then, as always, I appreciate you watching and look forward to seeing you on the next video.